Hello guys. Welcome to the next edition of 5KP program. Tuesday, 27th of July 2021. Adam speaking. And as always, we'll have interesting program today as well for this week. Before we go there, though, I want to show you the disclaimer. Remember, this video is for informational, educational purposes only and general in nature. No advice is being given. Investing is risky, guys, so we all know that. So if you make any trading decisions, you make them on your own. We are here to educate and to learn. And having said that, I don't have any special agenda for today. Today, guys, we're gonna focus on some charts because our portfolio has been and is a little bit boring since a longer period of time, because simply it was converted from trading portfolio, shorter term trending with positions which would expire every month or every 2 weeks. It was converted to investment portfolio where I went big to silver and gold mining companies and just also uranium, and put my bets on these sectors. And because we experienced some sort of correction there, now I'm just not willing to take the losses and just cash flow from the positions that I have them. So as you know, portfolio is a little bit boring, but still this program will be interesting, I promise. So we'll start just by looking what's going on in the market right now, and I'm just going to quickly immediately switch to Thinkorswim. So you can see our portfolio is not moving. It looked much better last week or a couple days ago as prices of metals recovered a little bit, but it just all came down today, just now. So the portfolio was looking much better, but it's all right. That's something that I could have foreseen, and it's not something that is basically shocking me too much, simply because I know something about markets and markets. Basically, how do you call this? My language is just getting destroyed. So, and let me just quickly check this. Seasonality, that was the word that I was looking for and I forgot. So market seasonality. Okay, so today we're going to look at this seasonality a little bit, and first of all from the perspective of the markets, so you can understand how the markets actually move in some sort of patterns. And if you measure them over a period of longer time, like 20 years, you can see some patterns repeat, and we can see behaviors of the market which are typical for the specific months of the year. Of course, it does not always work that way, but it's pretty good measurement, so it doesn't surprise you if you see, people always talk about November crashes and so on. Markets going down a little bit in this period of time. Well, that comes out from analysis of seasonality of the markets, and I'm going to show you how to do this in regards to SPY using this platform, Thinkorswim. So first of all, the markets, well, they just keep going, right? Like yesterday we had all-time highs, today a little correction here, but it's definitely like nothing. Just keep going. We all know why it keeps going, why it just does not correct. Money being, or currency being pumped into the markets, liquidity. This market is like a drug addict which needs heroin being free currency or easy cash. When the heroin ends, you guys know what to expect. But for now, the drug addict gets heroin, so what would you expect? It just keeps going, like I was telling you guys. It keeps going and going and going and going, and every correction it's not gonna stop it as long as the Fed is sitting there and providing this liquidity. Well, where is it supposed to go? So yeah, so that's basically very short analysis of this. If you look at VIX, it's like markets know about this, right? So it's like the volatility is low with like strong downtrend here. If we just draw some lines, from the peaks, if you connect as many peaks as you can, then the trend is kind of stronger. I would draw something like this. If I start from, let's say, this level here, something like this, you can see that the channel is kind of narrowing. So this the difference between the low points and high points are kind of getting smaller, and the trend is that VIX just keeps going down. So people are getting more confident and less stressed about the market. I wouldn't. I mean, we still having to do with the drug addict, which was not cured. So, but looks like the cure, of free currency is kind of working, so everybody is happy, except Adam, of course, is too suspicious about this, and that's the result of this. Now, market seasonality. How can you display seasonality of the market using Thinkorswim? Well, first of all, I would say we need to change the scale a little bit to see the months better and the movement over the current year. I would go for looking at something, or a couple of years, I would say. That's better, probably better measurement. If we just go and change the time frame and display like 20 years week by week, okay, then I will have 20 years to measure against. So starting, in 2001, getting to 2021. So now we have basically 20 years of measurement of this seasonality, the behavior of the markets over, different months in this period of time. So we have the scale now. How do you display the seasonality? It's actually quite easy, guys. You're gonna go here and you're gonna change the style here, chart mode from standard. You're gonna go to seasonality. They have this feature built in. So you can click that and it's gonna pop, month by month, so starting in January, you're gonna get to December 2021 and here 2022 starts. So we have a whole year chart. And that's the performance that we have right now, and seasonal performance is here. That's the average that we measured. Okay, so our time frame, this is 5 years. Let's go and do weekly. Okay, now, okay, this looks kind of flat. Okay, maybe we should do this to have some more detail. Let's do day by day. Okay, that's going to be more interesting, definitely. Now, of course, this scale, does not look too interesting to us. On this scale, it looks like a flat line. We don't see any seasonality, so we should change a little bit the scale and we do a manual. And I'm just gonna zoom in onto that line here and see if we can zoom that in and have a better perspective on seasonality. So now you can see, I can do it even better. Oops, I can do it like this. Okay. So now we can see what's going on in certain months according to this 20-year history of analysis. You see, still 20 years day-by-day analysis. It kind of created this chart here, okay? I mean, it created it, it didn't kind of create it. And you can see the behavior of the market, the usual, like average behavior of the market in that period of time, the last 20 years. So you see that Januaries for the last 20 years have been sideways movement on the SPY. So basically we didn't have much things happening. When the Feb came, okay, we had some massive moves up. So in general, that would be like sideways to a little bit bullishness. But at the end of Feb, March, you see the steep, I think it was also affected a little bit by the what happened 2020 crash. So, but still, you see that it tends to drop, okay? Then we have a massive recovery in April, okay? Then it begins to be sideways. July tends to go down a little bit, and then somewhere mid-July, August starts to be sideways. Mid-September to October tend to go down a little bit, and then we recover again. So that's the cool thing here. Why am I showing you this? Just like I told you guys, that brings into perspective what you may expect on the particular months when you're trading, okay? When you're trading your portfolio and you want to be bullish in the beginning of Feb or mid-Feb, well, remember that historically this month is bearish, okay? If you want to start trading bullish positions in April, that's probably a good idea because historically April has been very bullish. Okay, if you enter trades in the period of time of May, expect sideways movements. That would be probably something that will happen, okay? Because over the past 20 years, that's what it has been. So maybe you will do different kinds of trades over that period of time. So knowing all these option trading strategies, if you're here, probably you would be buying some calls, long call spreads, and so on to profit on this delta of the movement, of the bullishness. While here you may be more selling positions, so selling condors, selling call spreads, selling put spreads, okay, short put spreads, short call spreads, and so on. So just simply by looking at this, you can imagine what may happen to the market. So let's say, where are we now? Now we are somewhere in July 27. Okay, so if we just look July 27, we are entering a period where things just move sideways, right? Of course, the market is sick. It's not these days after the what happened 2020. The market is not same market anymore. So this information can be a little bit out of date. We need more measurements, more data, more years after that event in order to understand the full picture of how markets behave right now. But historically, that's what it used to be. So we may expect until September, basically mid-September, a little bit of sideways move on the market, and then October, typically a little bit of correction, while mid-October, beginning of November, you may expect some sort of a bullishness. So again, you will trade differently. Right now, you will be trading more cash flow positions and so on. Instead of being super bullish on something on the market or super bearish. That's how it looks like. So I hope this is useful for you guys. Just before I switch for the part for my students, I want to show you also something around what's going on the markets. So I will just straight jump into the economic, the calendar. So Forex Factory economic calendar. And you can see that this week is going to be very interesting because we will have FOMC statements, okay, press conference. So on Wednesday, tomorrow, watch what's going to happen. I mean, markets can make a move, okay. Also Thursday, advanced GDPs announced, okay. Also, we may expect some sort of a movement, and so expect some volatility. So whatever these guys going to say, I don't think it's going to surprise anybody. Just more stimulus, same low rates. I mean, probably they're going to be talking about sticking needles in your veins more than something which is actually creative or smart. So, but anyway, expect some sort of movement there. Other than that, if we look at the groups. Okay, still you see energy sector, basic materials beaten down today. In general, okay, 1 week performance not so bad, for basic materials, energy, they recovered as we could have seen in this portfolio, but today it was beaten down again. Energy and basic materials, I'm talking about those because we have them in our portfolio. Pretty bad monthly performance, okay? So I think that performance, that bearish run is close to be finished. And we may expect some sort of a recovery. But that was the thing that I wanted to let you know, since our portfolio is like the way it is, basically. If I go on briefing.com, well, they don't write any long stories anymore. So feel free to use this, but broad-based decline at open today, cyclical stocks, durable goods, orders for June missed expectations, so we have some bad numbers announced. 10-year yield slipped to 123, is going down. No comments, guys. So the numbers, okay. Probably they talking about what did they talk about again? I didn't really pay attention. So durable goods, okay. Well, some bad news, maybe that's why the market corrected, but if you look at it, it's not that much. We already seen it. So when you're trading, again, trade cautiously. Use this tool for analysis of the charts over the longer period of time, so you understand seasonality. And when you're trading, watch them, understand this chart. You can print it out even and put it on your wall, so you know the historical performance of the market, how it behaved in different months of a year, and that will give you a better clue of when to trade what and how to trade. You can actually put some alerts here and say, okay, now time to switch the strategy and go to more, let's say cash flow trading from bullish trading that we've been in the middle of the March or end of March, beginning of April. I was more bullish. So now I'm going to switch to cash flow, more cash flowing trades. And here maybe either not trade or turn a little bit bearish. Okay, so or just be very, very cautious when trading somewhere between June and July. We didn't do it, that's why our portfolio got hit. Okay, so if I did that, I'll probably be like, okay, it's time to close the positions and just wait for this little period of time here around this zone, and either sell and wait, and when I see a little bit of corrections, and then buy low. But okay, I didn't do it. I didn't expect that basic materials will do it as well as the rest of the market. But I'm going to do a little seasonality analysis with my students now on the ETFs that are corresponding to basic materials, energy, technology, finance, and real estate, so we can see seasonality for all these industries, and also that's something interesting. You guys who are on YouTube, you need to do your own analysis there, okay? So I'm going to switch for presentation for the students.